Well, hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Wednesday, September 9th of 2020. We got three headlines we're going to discuss. One, actually moving markets in a big way. So let's get right to it and thank you for watching. So our first topic of the day, we're going to talk about the markets right now. Last week we had markets selling off and then that acceleration into yesterday's open all day yesterday was another sell-off, if you will. So we got 3 or 4 consecutive days, depending upon what indices you're watching, of just markets taking a breather. Again, keep in mind, we saw some all-time highs just a couple weeks back on all the major indices. So for markets to take a step back and see some sector rotation consolidation, as I've discussed before, and also set up with, there's a lot of uncertainty out there as we get closer to the election. That's not uncommon right now. In fact, we saw NASDAQ hit about a 10% decline over the last 3 or 4 trading sessions. Really quickly, a 10% pullback is normal and natural that we see. And once it hit the moving averages, as I talked about that, a lot of the indices are hitting their 50-day moving average, which is a technical indicator. If it breaks through, that's sort of an indication that there's more trouble ahead, more volatility ahead. If it hits that number intraday and then bounces off like we did see, with some conviction and some buying from behind to support that, that's where we are right now. So again, from a technical market perspective, strategy speaking, we look for these in market internals to also indicate, well, is this more than a sell-off? Is this more than a 10% correction? Again, a 10% correction in about 2 or 3 trading sessions. No one likes to see it, but at the same time, this market is quicker and faster. As we discussed before, accelerating all trends, both in the economy as well in markets. So we want to watch to market technicals and internals as we are doing right now. So right now we're bouncing off the 50-day moving averages. And the key from this point forward is to watch the close. I talked about this. If we accelerate and sort of lose sort of our momentum as we get close to the trading day, today, tomorrow, especially on a Friday and a couple days from now, and we start selling off or selling into closes, that's not a good sign for markets. So we have to pay attention to that, as well as the US dollar and the Treasury and a few others, markets and gold. So watch the close to see how these sort of respective indicators close. That's the key. It's not the open, it's the close. So we're going to keep an eye on that for right now. Right now, markets are up strong, even stronger as soon as we got the July JOLTS report. The JOLTS report is basically a monthly survey, a job openings and labor survey. And they reported a 6.6 million increase, which is about 600,000 more than what analysts and economists have expected, which is the 6 million. Again, above exceeding expectations. Why the JOLTS number is important is because it's a quality indicator of future employment. So once we see that this number is strong, we can see that the labor market is still strong, the economy is still strong, and we're seeing growth in sectors like manufacturing. The IRMS manufacturing number earlier this week was very strong. And then coupled with other sectors of the economy that have continued to be extremely resilient, extremely strong. Think housing, right? Construction and housing. That hasn't missed a beat. In fact, it's accelerating as real estate trends accelerate positively, as well as asset prices or valuations behind that. This number is also important because in the report today, they went back to June, month previous, and they revised it up 1 million jobs that they didn't account for the last month or so. So this number right here for July could even get better in the month of, on a go-forward basis as they finally get all the tallies in there. But this is accelerating and a signal to the equity markets that the economy is strong and it continues to be strong, as evidenced by the labor markets. Now, that won't continue, if you will. We can see the unemployment rate continue to decline a little bit. But it's going to get a little bit stickier as we get closer towards year end, simply because we're going to get closer to the service sector or restaurants and bars and all of that service sector, if you will. Those jobs will remain or may never even come back. So that's where it was easy to come off the high of unemployment and below the 10% level right now. We're in the 8.4% ballpark right now. And that continues to come down. This jobs market report is a solid indication that we have a solid economy, and there's other areas or sectors that will absorb the unemployment. That's going to be, the slack is going to be sort of the bartenders, if you will, or the restaurants that may never open again. We just had Labor Day, so don't be shocked that a 2-week period post a holiday weekend where everyone gets together, that we see a spike in coronavirus cases. It's just going to happen when you put people together. As this virus is so quickly to spread, we will see. So unfortunately, we had a good trend in terms of coronavirus cases going down. But I think markets are already participating in sort of, that's why they sold off in anticipation of this. Going forward, it's a forward-looking mechanism, if you will, that we could see coronavirus cases spike in the next couple of weeks. So when we see those headlines again, just realize it was because of Labor Day. But I don't think we have another holiday except for, yeah, we do. We have October, which is going to bring trick-or-treating, and LA announced this morning that they canceled trick-or-treating. Might as well just cancel Thanksgiving and Christmas because this is 2020. I don't know. I don't really know what to say. You actually wear a mask when you trick-or-treat. So I'll let somebody else tell that to my kids because I'm not going to be the bearer of bad news when I get home tonight. But ultimately, that's it right now. Thanks for watching the update on today's daily update for Blanke, Schein Wealth Management. Be sure to like and subscribe. Sign up next week. We have the election edition, and we're getting a lot of subscriptions. Email me any question you'd like me to ask for Robert Stein, the First Trust economist, and he's the Washington strategist. So we're going to ask him about the election, which is less than 56 days away. So that's going to be sure to be exciting. Be sure to mark your calendars for the September 16th Zoom call for our election edition. So thanks for watching today, and we'll see you again next time. Take care.